Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. So guys, let's update our current view on the euro currency. As you can see, the bounce up that we have discussed previously has happened. So that was the 618 fib support and is 618 fib support on the daily time frame chart. Also that was the former weekly pivot support one on the previous week. So market has shown some small bounce up from this area. And we said that it's in general normal action that we could use for taking the short position in the continuation to the downside, because this market has taken out of these lows and stands somewhere between these lows and very close to the target. It is very difficult to imagine that market will turn to the upside right here and will leave behind the even minor 618 target of this ABCD pattern, especially after this significant move to the downside. So in this, currently you can see that the development to the downside is very harmonic, so the speed of this leg to the downside is almost equal to this one. This is a very good sign. I suspect that on the current week we will see the touching of the yearly pivot points 134.75 and 618 target from this ABCD pattern. That will be also the weekly pivot support one. So that will be really significant support cluster, and I think that we could see the reaching of this area on the coming week, on the current week. So currently we should be focused on the potential short entry where we could take the short position. Initially our thought was to wait reaching of the weekly pivot point, since this pivot point hasn't been tested yet on the current week, but we know that market in general gravitates to the pivot points to test it and after that choose the direction. So probably we could get this action on the current week as well. So if we take a look at the 4-hour time frame chart, here I see some interesting moments. That is our butterfly that we have discussed already on the previous weeks. Nothing new here. Take a look at the 1618 extension of the butterfly. So the target from that low to this high, this the swing butterfly, and the extension to the 1618 to the downside stands right here. And inside one ABCD pattern of the butterfly, ABC top, its 1618 target stands at the same area. Now you see the response of the market to the 127 target of the butterfly as well. So that's not only the 618 support on the daily time frame chart, but that is also the 127 extension of the butterfly pattern. But if you will take a look carefully at this development to the downside, you'll see that the market has shown the real acceleration right before it has hit the target. Usually this sort of the action suggests that market will continue move lower after some bounce up or without it. But here we finally have got this bounce that we have discussed, and that is respect on this support area, and right now we should expect for further downward continuation. It treats as worked well respect if market has shown at least a 3.8 bounce to the upside of the most recent swing. So here we have definitely the 3.8 or even greater bounce from this target. So in the nearest future we could suggest some deeper retracement, downward continuation to the next target that stands around 134.55, 134.75 area, so somewhere around the yearly pivot point. Also take a look that here market has started to form something that looks like the bearish dynamic pressure, because you can see that trend has shifted bullish. You can see that price stands above this red line. This red line is the MACD predictor, Judd-Napel indicator. Well, price stands above it, but take a look, the market continue move lower. So it means that price action doesn't support the trend direction. This just few candles here, it's just 3 candles. It's a bit difficult to say definitely that this is definitely the dynamic pressure, but currently it's look like it is, but because it's really some creeping downside with the line. So the dynamic pressure usually suggests the taking out of the previous loss and further upward downward continuation, acceleration to the downside. That probably lead us to the target. On the hourly time frame chart, meantime, on the hourly time frame chart, recall what we have discussed on the weekly research. We said that we here could get either double repo buy or brand body sell. If we will get the double repo buy pattern, we could trade on higher retracement to the upside. And here we've got the perfect double repo pattern. So thrust down, close above the 3x3, close below and creating the new lows. Okay, close above in this candle, and upward continuation. Usually it treats that market has reached the target of the double repo pattern if it hits the 50% resistance of thrust of the double repo. So here is definitely the 50%. So if we will measure this thrust of the double repo, it has started right here. Just a minute, I add the fib levels. Here's the 50% level. You can see the market has hit it. Okay, but at the same time, market hasn't quite reached the weekly pivot point. And theoretically, I can't exclude that this still could be some sort of more extended retracement A, B, C bottom to the 618, major 618 resistance right here of the whole move down. That's also possible. That because here, guys, we have agreement with the 618 resistance, this combination of the fib resistance level and target of the ABCD pattern. And take a look. Here is also we have the weekly pivot point that hasn't been tested yet. So since market was thin yesterday due to the holiday in the United States, today's morning, before US market will open, this market could show some continuation to the upside. I can't exclude it. But definitely it's very difficult to say right now what will happen. Because right now you can see market has shown retracement after this thrust up right to the 50% support. That's also normal. And currently I do not see the signs that could suggest that we will not get this second leg to the upside. Market currently doesn't show us any clear signs that it's really and definitely is continuing move to the downside already, that this is the continuation. It might be the continuation, but currently it's very difficult to say. Well, from that standpoint, if you have taken the short position here, you should place the stop of your position somewhere above it, above this area, because market really could show this ABCD pattern to the upside in agreement and test the weekly pivot point. If this will happen, you probably will have to scale in and enter the position, take more short position right here, but place the stop somewhere above it, because that's the risk that this really could happen. But this move to the upside will not break the overall bearish setup on the daily time frame chart, on the 4-hour time frame chart. It just could be the compounding retracement to the upside, because that is the double repo, and double repo could lead market to the higher levels. At the same time, I can't exclude that market really could reestablish move to the downside right here, because the minimum target of the double repo has been reached. So the 50% level, that's the minimum level that usually double repo reaches, has been hit. That's why, in fact, this target has been accomplished, and in general market could turn to the downside right here. So when you have such sort of combinations and some indefinite concerning the nearest price action, it's better to apply some scale in. So you could take some small position at some level. If market will continue moving to the upside, add more and take the major part of your position from the higher levels. That's the most reasonable type of action in such situations. So if market will start to accelerate slower, in this case, well, probably could say that really market has reestablished move to the downside and is ready to continue move to the 134.50, 134.75 area.